Over the past few weeks, I've gotten a lot of questions about the importance of bonds and bond yields for currencies. I look at bonds and bond yields every day. I write about them in my articles, I tweet about them in my zip charts, and I rely on them to select my Forex trades. Yields can be a very powerful indicator of currency movements, and as I point to them regularly, my inboxes have been flooded with questions about bond yields. So I thought, why not create a video explaining exactly what I look at, how I follow bond yields, and how I apply it to trading. The first most basic question to answer is, what are yields? Yields are interest rates of government bonds. One of the most unique aspects of currencies is that they are interest-bearing instruments. The central bank of every major country sets an interest rate or yield, and money, big money we're talking about, including institutional hedge funds and corporations, flow from one country to another in seek of the highest yield. In Bonds 101, the most basic concept to understand is that when bond prices rise, like when a central bank is buying, yields typically fall. When bond prices fall, which would happen if a central bank starts to reduce asset purchases or quote unquote taper, yields will rise. Doesn't happen 100% of the time, but that's what it's supposed to do. The most common yield to watch, and the most common one that I watch, is the 10-year Treasury yield for the US, and the 10-year Bund yield for Germany, and the 10-year gilt yield for the UK. When the 10-year Treasury yield is up, that tends to be positive for the US dollar. And when it is down, that tends to be negative. Of course, it doesn't predict the dollar's direction 100% of the time, but it is generally very difficult for the dollar to rally when yields are down and to fall when yields are up. If German bond yields are up and US Treasury yields are down, that can create a very attractive euro-dollar buy opportunity. So yields can be very predictive of price action for currencies on a short and long-term basis. I want you to take a look at this dollar-yen chart. The first chart that we're looking at is the weekly chart. And in this weekly chart, the candlesticks are dollar-yen, and the line is the 10-year Treasury yield. And at first glance, quick glance, you can see there's a very strong correlation between these two instruments. Now, the first question is, which one is the leader, which one's the lagger? And yields are almost always the leader, and dollar-yen is almost always the lagger. And you can see there's a very strong correlation, which tells us that dollar-yen takes its cue from yields. You see the same relationship in this daily chart. So on a weekly basis, we had a strong correlation. On a daily basis, you also see this very strong correlation. And guess what? That correlation also can be seen in this hourly chart. So the principle works on short-term charts as well as long-term charts. On a short-term basis, if I wake up in the morning and I see Treasury yields up sharply, I'll be looking to day trade with a long dollar bias. If I see Treasury yields futures, that is, because the yields themselves haven't officially started trading, I'll be looking at selling dollars. So that's how I use yields to direct my trades on a long-term as well as a short-term basis. The most common question that I get asked is, how do I follow bond yields? I use Tradingview. Tradingview is a completely free charting package. There's premium packages, which has a number of benefits, but to start, all you need is the free package. What I suggest is creating a list on your right-hand side. So I created a list here that I called bonds. You can call it whatever you want. Create a list. And in this list, you start adding the government bond yields. So US 10-year, and we want the US 10Y. That's the US 10-year yield future. Then we can add the German 10-year government bond yield, which is the DE10Y. And then you can add the gilt 10-year yield. And in this watch list, you can add other things. For example, you can add the S&P 500, So we can add the XPX, we can add dollar yen, we can add euro dollar, and so forth. So this is how we create our watch list. And you can start, basically when you turn on your TradingView package, you can have all your currencies and all your bond yields. And these are futures, so they will move overnight. And there you go. That's how you add the 10-year bond yields onto your charts along with, other types of instruments. So if you have any more questions about yields or fundamentals, a suggestion for a video or a comment on this video, please feel free to type into the comment section of this video or tweet me, and maybe you'll inspire a new topic for our future lessons. And to trade with me every day, visit bkforex.com.